Hi, now we are in the part two of interpretation of local government's financial statements, and I will continue the discussions. And now we move to the important part regarding the financial positions and also the financial performance of local governments. Right. The topic for part two is about introductions and conceptualization of financial statement interpretations. In the first part, we already discussed about effectiveness and efficiency of local government's revenue activities and also spending activities. Now, we'll talk about how we can interpret the financial statement of local governments. Right. A government's financial statements are not merely technical documents prepared by accountants. They are an important instrument of public accountability. In the public sector, the governments receive authority and resources from the people, the citizens. These resources may come from taxes, non-tax revenues, public debt, grants, or the management of natural resources. Because these resources ultimately belong to the public, the government has an obligation to explain how they are collected, allocated, and used. Financial statements become one of the formal ways for the executive branch to report back to the people and, of course, to the legislature. Through these reports, citizens and their representatives can assess whether public funds have been managed responsibly, transparently, and in accordance with the approved budget. A government's financial statements also help us to evaluate whether the budget has been implemented in the line with the public priorities and development plans. So it's not just like a blind spending. We need plans and we also need priorities. For example, when the government allocates funds for education, health, infrastructures, or social assistance, the financial statement provide information about whether these funds were actually spent, how much was spent, and whether the spending support the intended public services. In this sense, financial statements are connected to the performance, not only compliance. They help answer practical questions such as, did the government use the budget as planned? Were resources directed to programs that benefit the community? Is the government financially capable of continuing to provide services? Ultimately, this report supports the broader constitutional purpose of governments, which is to promote public welfare, educate the nations, and contribute to the achievement of the national goals. Now, we move to the uh, terminology of interpretations. Interpretations is the process of giving meaning to informations. It is not only about reading what is written, but also about understanding what the information implies. For example, in the illustrations, the document does not simply list the result of the drug test. The important part is how we interpret those results. When several substances are marked as negative, the reader understands that there is no indication of drug use based on the test. Therefore, interpretations transforms raw informations into a meaningful conclusions that can be used by others. The same logic applies to the financial statements. Financial statements contains number, classifications, balances, revenues, expenses, assets, liabilities, and budget realizations. However, these numbers are not useful if the users cannot understand their meaning. Interpretations of financial statements helps users translate accounting informations into practical insight. For example, a high spending realizations may indicate that government's program has been implemented actively. But it is but it still needs to be interpreted further. Was the spending efficient? Was it aligned with the plan? And did it produce benefit for the public? You will learn how to move simply from reading financial statements to understanding what they tell us about accountability, financial conditions, and a government's performance. Why do financial statements need to be interpreted? Financial statements need to be interpreted because the existence of financial statements does not automatically create accountability. A government may prepare complete financial statements, but those reports only become useful when stakeholders can understand what the number means. A government's accounting information is intended to safeguard public figures. Yeah, safeguard public finance. Support sound financial management. Yeah, and help the governments demonstrates public accountability. However, these purposes cannot be achieved if the report are only treated as a formal compliance documents. Interpretations is needed to connect the financial statement information with the broader questions. Are resources protected? Is the budget managed properly? Are government activities consistent with the public priorities? Also, researchers shows that financial statement information is often difficult to use in decision making. Users may face information overload because the report contains many accounts, notes, classifications, and technical terms. Some decision makers, including politicians and public officials, may not fully understand accounting information, while other users may find that information too complex. For example, a citizen may see a large number in government expenditure, but may not know whether that amount is good or bad without context. Interpretations help simplify, explain, and evaluate the information. It translates financial statements into meaningful insights about fiscal responsibility, budget implementation, service delivery, and public accountability. And financial statements interpretation is necessary because individuals' numbers rarely provide enough meaning by themselves. A single figures such as total expenditure, total assets, revenue realizations, or a budget surplus cannot fully explain the condition or performance of an entity. We need to see how one number relates to another. For example, expenditure should be compared with the approved budget. Revenue should be compared with revenue targets. Liabilities should be compared with the government's capacity to pay. Through this process, users can move from asking, what is the number? To asking, what does the number indicates? And this is the real value of interpretations. Interpretation also important because financial statements become more useful when they are compared across time, across entities. We can compare this year performance with last year performance to see whether there is improvement or decline. We can also compare one government entity with another to assess relative efficiency, fiscal capacity, or service delivery performance. For example, if two local governments have similar budgets, but one delivers better infrastructure, health, or education outcomes, financial statements interpretation can help us ask why. Therefore, interpretations link accounting number with performance evaluations and decision making. It helps managers, legislators, auditors, and citizens use financial information not only to understand the past, but also to make better decisions for the future. The interpretation of government financial statements has several important purposes. First, it helps improve government's performance in implementing programs and activities for public services. Financial performance allow us to examine whether public money has been used to support programs that matter to citizens, such as education, health, infrastructures, social assistance, and public administrations. Second, interpretations helps the governments allocate resources and make better decisions about how those resources should be used. For example, if a program absorbs a large budget but produces limited public benefit, the governments may need to redesign the program, improve implementations, or reallocate funds to more effective activities. The interpretations of government financial statements is also closely related with the principles of state financial management. Based on Article 3 of Law Number 17 of 2003, state finance should be managed in orderly, lawful, efficient, economical, effective, transparent, and responsible manner. This means that financial statement analysis should not only focus on whether money has been spent, but also whether it has been spent properly and meaningfully. Financial ratios can help reflect the government's ability to implement the budget, manage resources, and maintain fiscal responsibility. For example, a budget absorptions ratio may show implementation progress. Fiscal independence ratio may indicate reliance on local revenue, and efficiency ratio may help assess whether resources are used economically. In this way, interpretations support public transparency and accountability by turning financial data into evidence for evaluating government's performance. Right, the usefulness of financial information depends heavily on accuracy. In the context of public accountability, financial statements are the output of the accounting process and functions as a reporting instrument from the governments to the public. The executive receives a mandate to manage public resources, and the public has the right to know how that mandate has been carried out. Therefore, accurate accounting information is essential because inaccurate figures can create misleading conclusions about budget realizations, program implementations, assets, liabilities, or the government's financial positions. For example, if expenditures is recorded in the wrong account, users might misunderstand how much money was actually used for public services compared with the administrative costs. However, accuracy alone is not enough. Accounting information must also be practical and understandable for users. Government financial statements are often complex because they include many accounts, notes, classifications, accounting policies, and technical terms. This complexity can create a risk of misinformation, especially for ordinary users who do not have an accounting background. Therefore, financial statements should be interpreted and presented in a way that helps realizations figures interpretations can explain. Yeah, it should be like interpreted and also presented in a way that helps a different users understand the main message. Like, for example, showing budget relation figures, and interpretation can explain as well whether the realizations indicates good implementations, delays, inefficiency, or changes in priority. In this way, accounting informations become not only technically correct, but also useful for decision making, oversight, and public accountability. In the reporting cycle, you early learned that accounting begins with identifying and analyzing financial transactions. After that, the transactions are recorded in journals, classified or posted into the relevant account, summarized in trial balance, adjusted when necessary, and finally presented in the financial statements. In the Indonesian government's accounting context, informations such as uh, the government's accounting standards have helped accommodate two important aspects: accuracy and practicality. Accuracy means that the transactions can be recorded, classified, and summarized more instantly. Practicality means that the system helps the accounting process become more efficient, standardized, and easier to manage across the government entities. However, the important point of this part is that the reporting cycle should not stop at the presentation of financial statements. In many cases, the accounting process is considered complete once the report has been prepared and submitted. Yet, remember, from the accountability perspective, this is not enough. Financial statement still need to be interpreted so the user can understand what the information means for performance, budget implementations, and public service delivery. For example, after local governments prepares its financial statements, the next question should be, what does the report tell us about fiscal capacity, spending priorities, efficiency, and service outcomes? So interpretations should be seen as the next step after reporting because it transforms accounting outputs into useful knowledge for oversight and decision making. Like recap for you to understand, there are two types of government financial operations. The first one is budget implementation report, and the second one is the financial statements itself. So the government financial reports, the first group here is the budget implementation report. This include budget realizations report and a budgetary fund balance report. These reports focus on the relationship between approved budget and actual implementations. These two help users understand whether revenues were collected as planned, whether expenditure were realized according to the budget, and whether there is remaining a budget balance. For example, if the government's department has low realization rate, we need to ask whether the program was delayed, whether the procurement was ineffective, or whether the original budget plan was unrealistic. And the second group is the financial statements that describe the government's broader financial condition and operational results. The operational reports explain revenues and expenses from government's operations. The equity change reports show changes in net asset or equity. The balance sheet presents asset, liabilities, and equity and certain debt. And the cash flow statements explain cash inflow and outflow, while the notes to the financial statement provide important explanations about accounting policies, details of account, and other contextual information. So together, these reports help users interpret not only whether the budget was implemented, but also whether the government is financially healthy, accountable, and capable of sustaining public services. And when interpreting government financial statements, we should first ask who the users are. In this context, the main users include society and member of the legislature. Society needs financial information because the public money comes from the people, either directly through taxes and fees or indirectly through the use of national resources. And members of the legislature need these informations because they have an oversight function. They review whether the executive has implemented the budget properly, whether the public resources have been managed in accordance with the approved plan. The second focus is relevant informations. Interpretation should not discuss every number in the financial statement in isolation. It should identify information that help users understand the government's ability and capacity to manage resources. For example, users may need to know whether the government can finance public services, whether it depends too much on transfer or debt, and whether spending support development goals. Interpretation should also explain the consequences of government's effort to achieve its goal. For instance, a large infrastructure program may improve public access and economic activity, but it may also create future maintenance costs or financing burdens. Therefore, good interpretations help users understand not only what the government has done, but also what the financial implications are for public accountability and future policy decisions. And this slide distinguishes two important concepts in interpreting financial statements. They are financial performance and financial conditions. Financial performance focuses on what the government has achieved during the particular reporting periods. It is more active in nature because it reflects government's effort in collecting revenue, spending the budget, and delivering public services within one fiscal year. The main sources of information for evaluating financial performance are usually budget realization reports and operational reports. For example, we may examine whether the government achieved its revenue target, whether expenditure was realized according to the plan, and whether public service programs were implemented effectively. Financial conditions, on the other hand, focus on the government's capacity to continue providing service in the future. It is more passive in nature because it reflects the accumulated result of the past decisions, policies, and financial management practices. The main source of information is the balance sheet, which presents assets, liabilities, and equity at a specific point in time. For example, a government may show good performance in one year because it successfully implemented many programs, but its financial condition may be still weak if it has high liabilities, limited cash, or poorly managed assets. Therefore, interpretation should not only ask whether the government performs well this year, but also whether the government has sufficient financial capacity to sustain public service in the long run. This part provides a conceptual framework for interpreting local government financial statements. The main idea is that local governments or Pemda, pemerintah daerah, does not manage financial resources for itself. It manages resources in order to perform its duties and function in serving the public. In this framework, local governments stand between several important elements: stakeholders, rights, obligations, the environment, public service function, and national goals. Stakeholders such as citizens and the legislature provide mandates and expect accountability. The government has rights such as the authority to collect revenue and use public resources, but it also has obligations such as paying liabilities, maintaining services, and using funds responsibly. Therefore, the financial statements interpretations should be directed toward several key questions. Like, can the local governments convert its revenue potential into actual revenue efficiently and effectively? This relates with revenue-based conversions, revenue operational efficiency, and financial independence. Next, can it meet its short-term and long-term financial obligations? This relates with solvency. Can it respond to unexpected events in the future, such as disaster, economic shocks, or policy changes? This relates to financial flexibility, and most importantly, can the local governments carry out its public service duties and contribute to national goals such as economic welfare, health welfare, and educational welfare? For example, a local governments may have high revenue realizations, but if the money is not translated into better schools, health services, roads, and social protections, then the financial performance has not fully supported public welfare. Thus, interpretations connects accounting number with the real purpose of governments, which is serving the community and achieving public goals. The dimension of financial performance help us interpret whether local governments is capable of using its financial authority to deliver public services. The first dimension is the revenue-based conversion ability. This refers to the government's ability to transform its revenue potential into actual revenue. For example, a local government may have strong potential from local taxes, user charges, or natural resources. But the key question is whether that potential can be collected effectively. The second dimension is revenue operational efficiency, which focuses on whether the governments can collect revenue without using excessive administrative costs. In other words, revenue collection should not only be high but also efficient. These two dimensions help us assess the right side of the government's finance, whether local governments can exercise its authority to obtain resources in a responsible and productive way. The other dimensions focus more on the service promises and the sustainability of public services. Commitment to implementations of the promise asks whether the government actually carries out the programs and services it has promised in the budget. Budget solvency asks whether the government can fulfill its service promises without losing or disrupting existing achievements. Operational solvency asks whether the government can continue performing its routine duties and functions without weakening current service capacity. The commitment to maintain service focuses on whether the governments protect the existing quality of public services, while the service improvement commitment asks whether the government is willing and able to improve service quality over time. For example, in the education sector, it is not enough for local governments to keep school operating. It should also maintain the quality of teaching facilities, gradually improve access, learning infrastructures, and student support. Therefore, these dimensions help us interpret financial performance not only as a budget executions, but as the government's real capacity and commitment to serve the public. The last part of our discussion here is a dimension of financial condition help us assess whether the local government has the financial capacity to continue operating and serving in the public in the future. The first dimension is short-term financial solvency, which refers to the ability to meet financial obligations such as paying bills, salaries, operational expenses, and short-term liabilities. The second dimension is long-term financial solvency, which refers to the ability to meet obligations that beyond to extend beyond the current year, such as long-term debt, infrastructure commitment, and future service-related liabilities. These two dimensions are important because governments may appear active in spending and implementing programs, but if it cannot meet its obligations, its financial condition may be weak. The other dimensions look at the broader financial resiliency and service capacity. Financial independence refers to the ability of fund development using its own revenue resources, rather than relying too heavily on the transfer from central governments to external financing. Financial flexibility refers to the ability to respond to unexpected events such as the natural disaster, economic shocks, public health crisis, or sudden infrastructure damage. And finally, service capacity refers to the ability to provide services at standard and quality expected by the community. For example, a local government with strong financial condition should not only be able to pay its current bills, but also maintain roads, support schools, provide health services, and respond to emergencies without severely disrupting existing programs. Therefore, financial condition interpretations help us understand whether the government is financially sustainable and capable of supporting public welfare over time. That's all. Thank you so much for your attention, and hopefully you can get something from these uh, explanations. Bye bye.